Welcome back to Bazaar Corporate Radar here on CNBC TV 18. Well, that's promised. Let's get chatting with the management of Jindal Stainless. Remember, we have two listed entities out there and they are, progressing towards a merger. So we'll talk about the entity as one. The street will be waiting by for that merger, by the way. To understand more, what's the way ahead? Well, we're currently joined by Mr. Anurag Mantri, the Group CFO at Jindal Stainless Group. Hi, Mr. Mantri. Thanks so much for joining in. Well, a couple of numbers that we want from you. The last time we had chatted, I remember you went ahead and increased your EBITDA per ton guidance to around 24,000 to 25,000. Earlier, it was, in that vicinity of 18 to 20,000 odd. But the 9 months, the number is higher than that. So for FY22, what should the EBITDA per ton number look like? And also, you spoke about 18 to 20% volume growth. You stick to that for this year, FY22? Go ahead.
Yeah, so Nigel, you are absolutely right. That 24-25 was the last time guidance, but 9 months we delivered almost close to 27,200 EBITDA per ton. We expect that now for the full year to be around at 27,000 rupees EBITDA per ton. That's what our guidance. So because we are seeing the kind of business development which we have done in the mix side on the supply chain side, we are quite confident that this year, full year, FY22 will achieve the 27,000 EBITDA per ton. On volume side, we guided it initially 18 to 20%. There were multiple COVID waves, lockdowns in between, but we are confident of achieving around 20% of the volume growth still, despite all the challenges, because we kept balancing our exports markets also. So that's giving us good results. So a full year basis, 20% volume growth and 27,000 of EBITDA per ton, close to that.
Okay, so that's good to hear. You hold on to your guidance for FY22, but FY22 is largely behind us now. So let's look ahead. How is the demand situation at the moment, both in domestic and exports? And what is a realistic target you can have for volume growth in FY23?
See, demand side on a stainless steel, both domestic as well as export market are doing fairly well, because it's being a stainless steel, it's a value-added metal. We are seeing across the world the demand's picking up. The volume side, obviously, next year it's a bit early to say, but at least 10% I would say FY23, because we'll have to because as we are moving more towards specialized product, we'll have to balance our capacity. So it will be more with our capacities towards specialty product where we'll be focusing. But I think it's too early to say, give the full year guidance for FY23 on a volume side, but at least 10% we are hopeful to achieve even on a specialized product side.
Okay. All right. Mr. Mantri, debt. That was a problem maybe around, a year, 2 years ago odd. But you all have done quite well. You all have been repaying your debt. So give us a couple of numbers. At the start of FY22, what was the consolidated debt? I'm talking about both the entities together. As of today, what is it? And where is that number headed? Maybe you can knock off the ICDs as well, because I think once the merger takes place, that will be out of the way. Please go ahead.
Yeah. See, today, if I look at the debt, consolidated number on both the entity basis is around close to 3,400 crore, including of the long-term and short-term debt. Short-term debt has bit of increased in last few months because of the high raw material prices, especially nickel, and the higher volumes. So it's commensurate with our working capital requirement. But long-term debt has reduced considerably. So to give you to put it in the perspective with the ratio, the way we are actually at debt equity level of 0.5, which is one of the best in the metal industry. Debt EBITDA, we are lesser than 1, which is again one of the best in the metal industry, which is highly capital intensive. And going forward, Nigel, we expect to maintain these ratios very carefully. So we would like our endeavor will be to maintain the ratios around that. And the year we will close to the similar debt levels this year also.
Okay, no, but what about the absolute debt number? It's at around 3,200 crores. You have a big...
Right now it's 3,400 crore, including our short term. The long term debt is just 2,500 crore actually.
So what is the reduction plan?
By March, there will not be much reduction because the working capital is very high right now. The raw material prices are going at very high pace. So there may not be a reduction right now in next 2 months there. But I think this is comfortable because our EBITDA is increasing. So we are comfortable with, and the working capital largely goes into the business volume growth. So we will maintain around these numbers.
No, I guess the reason why Nigel is also asking about the debt and how much you plan to reduce is because there's a capex plan coming on board as well. How much was earmarked earlier? How much have you spent? And what will all of this mean for your debt levels? I mean, would you pile on more debt because of this?
Not immediately, because mostly largely we are doing from internal accrual. There may be minor increase in the debt level, but nothing much. That's why I'm saying that we will, by end of March, we will be continuing with close to 3,500 crore of the debt level on long term as well as short term, despite higher working capital requirements. The capex side, our guidance was close to this year we'll be spending around 1,100 crore, out of which almost 75% cost has already been committed. So we are well on track. There is no cost overrun. We are well on track on delivery, both in terms of the cost as well as on time on this new capex side.
Okay, all right. Very quickly then, Mr. Mantri, if you could tell us, when does the merger take place? That's been, postponed Q2, Q3. Now we are in Q4. By when do you think it will close out?
Very good. I think SEBI and the stock exchange gave us approval well within time. But because of NCLT multiple challenges, there was a delay. But there is a very good progress last week. Honorable bench of Chandigarh High Court NCLT has heard our first motion petition, and they have now reserved the order. So now I think the things will move on more on the process side, and in next 6 months, 6 to 7 months, we hope to complete all the processes which is governed by the NCLT.
Okay.
But it's on track. I think there is at least breakthrough.
So by second quarter of next fiscal?
Yes. So maybe end of second quarter next fiscal.
Okay, we have this burning issue, that's taking place. All eyes are on Russia as well as Ukraine. I wanted two numbers from you. One is, what is your current exports to Russia of the consolidated entity? What would be it in percentage terms? And also Russia, well, they produce a lot of nickel as well. And that's one of your input costs. So how do you see things getting impacted out there? Go ahead.
Okay, so let me answer our second question. Nickel side, there are multiple sources, and as you know, we largely do from a scrap route because we have electric arc furnace, and 90% of our raw material comes from the scrap route. So for that, there are multiple markets. US and Europe are the large generators, so we don't see much of the challenges on the nickel side because of this. The other side, on the export side, as I mentioned in the last time, actually we have made our business model in a fashion that we can switch our exports also within the geographies, and there are three large geographies: US, Europe, and Russia. So Russia, depending on the volume and the prices which we get, we can actually switch those volumes to the other geographies well. So typically right now Russia contributes to almost 10% of our exports. But we don't see a challenge in terms of all these prices because US and Europe are the large market, and we have the product range where we can switch between these markets.
Okay, all right. We will leave it at that. Thanks a lot for joining us and giving us an update on the business. That's Jindal Stainless saying that they can hold on to their guidance, 20% growth this year. And next year, they're looking at about a 10% volume growth on an average, and they're comfortable with their long-term and short-term debt levels. Well, for the market, it is all